Hello and welcome to Compass Global Markets Weekly Update. I'm Tony Boyajian. Well, in this crazy world of foreign exchange, there's never a dull moment. We'll kick off by talking about what's happening in the UK. The sterling pound remains volatile in light of the BREXIT negotiations that have already started. Concerns rage on how UK Prime Minister Theresa May will negotiate the Brexit aftermath now that the Conservative Party has lost its majority in Parliament. A weakened UK government basically implies that, coupled with a large current account deficit and negative UK-US interest rate differentials, the pressure really is on the downside on the sterling pound because business confidence levels have slumped. We now expect news to filter out in the next few days that the Prime Minister may be forced to resign. If that's the case, then near-term sterling pound support will fall against the US dollar. Look for 125.70 as a base and 129 remains the top side. Looking at Europe, euro dollar has ignored the ECB's lower inflation forecasts and remains a buy on the dip strategy. We expect the improving Eurozone economy and the impending tightening cycle later this year to help support the euro. The euro has also benefited from the recent election. The French President Emmanuel Macron has won at least 355 seats from the possible 577 seats in the National Assembly. Now this bodes well for the Eurozone because what it implies is a smoother package, a smoother passage of economic reforms going through in France in coming months. Last week we saw the US Federal Reserve raise interest rates by 25 basis points. They delivered, surprisingly, a hawkish tone to the market to suggest that they are in control of monetary policy in the US by maintaining a steady path, but the proof will be in the pudding because I'm sure it'll work out well, but the bottom line is the market is now factoring in a 50% chance of another rate hike in the US in September. Their $4.5 trillion US balance sheet will also be reduced, possibly from December this year. Fed Chair Janet Yellen mentioned that it is important not to overreact to a few readings. Well, let me just say something here. It seems that she has a glass half full approach because when we look at the US economic data, it's been weak, not just for a few readings, but for almost 4 months straight. And over the weekend, we saw the US dollar remain fairly limited because of disappointing housing activity numbers and also consumer sentiment data. Now, tonight in the US, first quarter current account data is expected to show a wider deficit. Something around $124 billion is the forecast. So we expect the US dollar to remain limited on the upside. Look, in Australia, we saw some stellar jobs numbers last week. The employment growth in the month of May was better than expected. It rose by 42,000 jobs. 52,000 growth in full-time jobs and part-time fell by about 10,000. The unemployment rate fell to a 4.5-year low of 5.5%, and that's helping the Australian dollar remain firm. The Aussie dollar also benefited from relatively stable Chinese economic figures regarding retail sales, industrial production and fixed asset investments. The market expects the second quarter GDP number in China to hover around that 6.8% per annum level, which also bodes well for the Aussie. In one negative for the Australian market, yesterday we saw Moody's Investors Services join S&P to downgrade Australia's credit rating by one notch, the credit rating for the Australian 4 big banks by one notch, on the back of the RBA's concerns about the sharp housing downturn and in light of increasing household debt levels as well. So whilst we expect the Australian dollar to find support around the 200-day moving average of 75.3 US cents this week, the upside will be limited towards 76.5. Importers are encouraged to take advantage of the firmer Aussie dollar against the crosses, in particular against the euro, sterling and Japanese yen. Don't forget to watch us on Sky Business News every Thursday lunchtime from 12:15 p.m. for our latest markets update. Thank you for watching Compass Global Markets. I'm Tony Boyajian.